Hi there, Glenn Doherty here from Jigsaw Private Wealth. The share market is going bonkers. Are you strategic or emotional? Now, these videos are here to help you get retirement tips to help educate you, make you money, save you money, and help you achieve an incredible retirement. And at the moment, the share markets are going bonkers. And it just reminds me of a recent situation with my own son where I got involved and made the wrong move and jumped too quickly. He came home one day from school. He came into my home office and crying, and I was wondering what was going on. I didn't like to see him upset. And he said to me, Dad, he says, there's only going to be one cricket team. And I said, I'm not going to get much time to play. He said, I said, well, I just want to get a bit of a background on what was going on. And he said, we've just been told there's only one team and they're going to be swapping players in and out, in and out. And I'm just going, what? That doesn't sound right. It doesn't sound right at all. So I just jumped the gun and I've gone, no. So, and I've gone, okay, and he said, he didn't want to play. And I said, well, all right, well, the other options we've got is go to the local club, see whether they've got an available spot for you to play in. So I fired off all these emails. I went back to the PE teacher at the school because I thought it was a bit unusual. And a little bit later, after a lot of stressing and a lot of stuff I should never have jumped to conclusions on, I just got an email back from the PE teacher who said, look, there's going to be two teams. Everyone's going to get to play every week. And then that sorted out the whole problem. My son was calm again. He's quite happy about that. And it just taught me a lesson that I keep telling clients all the time, particularly when it comes to share markets, that there's a lot of information and a lot of misinformation out there. And how you react is very important to it. So let's have a little bit of a look at the moment of what's been going. The headlines out there, the share market tumbles and broad sell-off and coronavirus spreads. And then you've got a lot of others that come out as well. And that looks like this. You've got, ASX tumble, sea of red, and you're sitting there going, oh, geez, what am I going to do with my investment? Do I sell out? Am I going to lose it all? It's one of these things that, from an emotional perspective, your emotions start to kick in. If you've experienced this before and you're hardwired, then you know to just not listen to this noise. So I guess the key point at the moment, this is all just noise, and these things generally happen in share markets all the time. So let's just look at the facts. Just like with my situation with my son, I had to go back to the source of the information to get the right information so we knew exactly what was going on. So how do you sort of feel at the moment when you see this information come out? Do you feel nervous? Do you feel stressed? Are you panicking? Because if you're close to retirement and this is going on, there's people talking about a global recession and all these sorts of things. Or are you just someone who's just calm? Now, that would be the ideal place to be, but most of us are emotional thinkers. So let's have a look at this. Now, I do apologise for this being a little bit blurry, but this is a chart on all the past epidemics that we've had going all the way back to 2003 with SARS, the dengue fever, the swine flu, Ebola, the Zika. And it just shows you in the first month what happened in the majority of these cases, the third month what happened, the 6th month, and also the 1 year, 3 and 5 year as well, just to show you the recovery. And in particular, I guess if you have a look at the chart there as well, is even though there may have been dips or the outbreaks or the epidemics may have had an impact on share markets, they were short-lived. And I think the one thing to remember at the moment also is don't forget share markets are at all-time highs. So in due respect, they were most probably due for a bit of a pullback in the marketplace. And this just happens to have been one of those things that has caused that. Let's just go on and have a quick look at how particularly the Australian share market has come in here. We're looking at the ASX 300 growth of 10,000 since inception from 2002 up until 2020. So you can see there's dips that were in there. This was a global financial crisis that was in here, bounced back, and you've had dips all the way along. So it's actually gone a long way. And if you've been watching your portfolio, you would have seen it go up. But there are some keys when it comes to this. The key to successful investing, it does require some discipline when the markets do melt down. Now, I had a client on the phone this morning who was talking conspiracy theories and all sorts of stuff, and I've just got like, hang on a minute, mate. I said, look, let's just bring it back a notch. We're talking about things that we cannot control. Now, we know all sorts of things are going to go on with share markets. There's a lot of noise out there. The media is 24/7, but it's time to be calm and think logically and rationally about how you invest and the actions that you take next. So what does a disciplined investor do? Well, you stick to your investment strategy. And one of the big things that I've seen recently is people just aren't diversified. So when these things come, it hits them hard and pretty hard. And if this sort of event occurs around retirement, particularly if you're very close to it, it's now time to really shore up your investment strategy and make sure you are diversified, that you're taking on just enough risk to get the job done, but not to do any damage. And there's a certain way that we go about doing that for clients to make sure they can see through their retirement quite safely. Certainly, I think it's a good time and a wake-up call for a lot of people to rebalance your asset allocation. Now, when we talk about asset allocation, that's the mix between shares, property, cash, and fixed interest. Now, if you haven't got that spread appropriately for the risk that you're comfortable with, that can have a massive impact on your end balance or your experience through your investing. So it's important to get that right. And particularly where share markets have gone up in the last 5 to 10 years, you'll find that your risk levels, if you haven't adjusted them, have gone up as well. And it's a good wake-up call at this point in time to have another look at that and see what you need to do to bring them back in line with your comfort levels so it doesn't do any damage down the track. And the next one is really just focus on what you can control and let go of the rest. So you can control where you invest your money. You can control the amount of risk that you take. You can control the amount of money that you have invested. You can control the types of strategies that you use to build up your nest egg to live an incredible retirement. Focus on those things. Make sure you build in a bit of safety into your strategy, and the rest will look after itself. And obviously try and stay away from the news channels because they're just negative. So are you someone that's worried about whether you're going to have enough for retirement, concerned about your progress? And I guess the biggest concern we see a lot of people have is they're worried about, and you might be the same, about whether they're going to have enough. Actually, how much do I actually need to retire on? And what we're finding at the moment is a lot of people are working off incorrect assumptions. People are living longer. Returns on investments are most probably going to be lower. Some people are taking on more risk than what they need to take on, others not enough risk. There is an ideal level of which we look at for clients to make sure they can safely get through retirement, and those assumptions are retested so that they've got enough. Are you stressed about your investments, not quite sure about your investment strategy, or even if you're doing the right thing or investing in the right areas? Or you're wondering whether you're maximizing all your opportunities from a tax perspective, super perspective, and also from maximizing your retirement pool so that you can live an incredible retirement. So if that's you, then I think it's time to book your secure retirement call. And we've got the link there if you want to have that call. And I'm not going to tell you now, we are not trying to sell you anything on this call. We are trying to help you out. So if there are things that we can help you out with, we'll certainly let you know, and we're very selective of the type of clients that we actually take on board. So we don't take on everyone. But if we think we can help you out, we'll let you know, and then we can decide what to do from there. If not, we'll try and point you in the right direction, give you some information that can improve your position and get you on your merry ways and give you a bit more confidence about the future, about your retirement. So if that's you, make sure you book your call there. And just to put it out there, this is only general advice. It's not specific to your needs. You'll need to seek advice from a qualified financial planner if you are looking for advice. So I hope that's been useful. If you've got any comments, feel free to email me back on the email that you get this on, or at gdoherty@jigsawprivatewealth.com.au. Other than that, I hope you have a great day, and I hope this is useful, calms you down a bit in relation to the investments, and you can go on and invest safely and calmly and have an incredible retirement. Okay, guys, bye for now.